What's going on, everybody? Welcome back to the Fisher Trader. So we're going to talk about something that apparently there is a lot of mixed confusion about, honestly, and that is the pattern day trading rule. So it was established by FINRA. It is not Robinhood. It is not Webull. It is not Fidelity. It's not TD Ameritrade. It's not Schwab. It's not any brokerage who established this. It is a financial regulatory authority. Okay, so PDT, as you commonly hear it, pattern day trading, GFV. Some of you know what this is, but just by not even caring. But GFV is a good faith violation. So we're going to talk about two things. We're going to talk about a standard trading account, standard brokerage, standard individual brokerage, IRAs that you have options abilities in. Pattern day trading does not apply only to options or only to stocks. It is actually really any asset that you trade in the same day, buy and sell. Some brokerages, I noticed that they have it marked that if you sell it and then buy it, that counts as a day trade, which I have not been personally affected by. But anyway, move on. Pattern day trading. How do you get around? I've seen so many videos talking about, I guess it's just clickbait more than anything, how to get around the pattern day trading rule, how to weasel your way past it or any kind of stuff like that. And I'm going to tell you right now, you cannot get past the pattern day trading rule. Why? It was established. Why it was established? I mean, I wrote a petition about this and posted it out on Facebook, Twitter, all these other places. I've got about 250 signatures. We need 100,000. So, I mean, if it stays out there floating long enough, maybe we'll catch that. I'm not the only one to do that. I actually found other petitions requesting the same thing. Now, there are people who think that the pattern day trading and good faith violation rules are in order. The good faith violation I can understand just because of how it works. You need to wait for your shares to settle. So with options, generally they settle overnight. With stocks, it generally takes at least 2 days, right? So I spoke to Fidelity the other day, and just to clarify, I hadn't had any good faith violations on my cash account and my large accounts. And they said, no, we're good right now. And I was like, just to clarify, how fast do they settle? Stocks, 2 days, 48 hours. Okay, cool. Now, what you can do is buy, the next day sell, and then buy something else, and then sell. Like if you stagger it like that, you'll be okay. If you're using like the whole account value or whatever, long dividend holds and things like that, I have a separate account. Hopefully this video is good, guys. Hopefully the phone is not, zooming in and out, trying to focus on me constantly to gather that. But anyway, back to the point. $25,000. This is the first thing that you'll see or read anytime you look up the pattern day trading rule. And that is exactly the only way to get around the pattern day trading rule. And guess what? The moment your account goes under $25,000, you are now back subject to the pattern day trading rule. So if you put in 25 G's and you immediately start making money, you're good, as long as it doesn't come back down. So they basically throw you out a margin call, basically, because in Fidelity, my options and margin are fairly linked together. So in the event that the account went below that, you get the call, hey, you need to bump this up, or pattern day trading rule automatically reapplies until it's back over $25,000. What is a good faith violation? Well, as I said, that is when you have a cash account, and that is when you spend more than you have. So say, you spend the money, say you have 10 grand, you buy $10,000 worth of shares, and then you sell it like 10 minutes later, the same day, whatever. That is a good faith violation because you bought shares with money, no big deal, but then you sold them before they settled. Therefore, you sold them. Now, in the event that you buy something else, guaranteed good faith violation because the cash is not settled yet. So there's no way that you had the money to buy this other thing. Whatever stock or whatever. So how do you get around that? Most of them limit you 90 days. That's what the account restriction becomes, 90 days. Now, Fidelity, for me, I didn't have a 90-day restriction of using the account. I just had a 90-day restriction of being able to buy and sell something within the same day. Like it wouldn't even take the order at all. So that was a good learning experience. How to get around the pattern day trading rule. Like some of these videos, broadcast to you. There is no way to get around it until you put $25,000 in your account, period, or more. There you go. There's another way. How about that? 100,000. There you go. That's another way. Check this out. And that's with stocks, options, whatever it is. Cash account. I'll write this so you guys are clear. All right. Hopefully the back of my head is entertaining. Cash account. All right. So with Trader Circle, Kevin always uses cash account, preaches cash account, and I love it. It's great because in the event that you have my recommended value of your account size, unless you are extremely disciplined in how you trade, mainly options, $10,000 is what I would recommend starting with. Now, some people will say that, oh, that's a lot of money, man. I ain't got 10 G's, and that's okay. You know, maybe just save your money and then get into it when you have it. Therefore, you can take time to learn all of these different aspects of trading, strategies you'll use, et cetera, et cetera, et cetera. Okay, $10,000. I was thinking about it last night talking to one of my pupils, and I said, you know, how much money do you think you could trade in a day, you know, if you had to average out $10,000 in a day? And it's saying that options expire, you know, you sold them all, you got rid of them, now they're settling overnight, so you're square in the morning, you should have available your $10,000 plus whatever profit or loss you had, so give or take, you know, your $10,000. Say you made $2,000, now you're up $12,000 on the total account. So say $2,000 profit. All right. Put a P. Hopefully you guys can see that I bought these badass markers, right? I got them from Japan. Check that out. They are refillable, so that's neat. But they're super thick. Now, granted, apparently somewhere around here in the U.S. you can buy these from a store, but they're like $20 for a pack of 2. These were like $8 each. So I got 3 of them total. I got red, blue, and black. I was gonna get green and yellow, but wasn't a point. Anyway, so say you got a cash account, you got 10 G's in there, you buy, just say you gamble the whole account, you made $2,000. You now have $12,000 total equity. All right. I'm gonna try to explain this as easy as I can. Hopefully my video lasts as long. $12,000 total account. Let's see, not profit. Already did profit. We'll do TA for total account. So we go. So you got 2,000 profit. Now your total account's 12 grand. Here's the problem: you cannot use any of this money until tomorrow, right? Why? Because the cash account, good faith violation. You're going to get hit with this in the event that you try to use this, or maybe your account has certain limitations on it that'll say you cannot make this trade, you have no settled funds, you have no settled cash available to trade, 0, whatever the hell it says. That's going to be what's going on. Now, in the event that you were going to buy stock instead of options, you know, you could probably do that. You could probably have this account, and then you could, now depending on if it sells or not, that's really on the fine line of things, because I've done it before, and then I bought shares and then just didn't sell them. And it says, if you sell these shares before the cash settles in the account, you will be in violation of the good faith violation. So, okay, cool. What's next? So we got a cash account. We started with 10 grand. We risked the whole $10,000. We came out with 2,000 profit. Beautiful thing. Don't do that. There's 0 risk management to gambling. If you want to gamble, might as well go to Vegas and waste your money, or you can send it to me. I'll be more than happy to do it for you. Except for I'll invest it. I will not gamble it away. You know, for all you gamblers out there, you know, no hard feelings. Hopefully you don't take this video the wrong way, but you know, in the event that you're really good at gambling, you're really good at, you know, blackjack or Texas Hold'em or hell, slot machines, who knows, and you make money and you constantly take money over there and you bring back 2 or 3 or 4 times what you took in, and you're not in debt, you know, with that kind of stuff, yeah, whatever, who cares? It's your life. Have fun, you know, don't be stupid. Anyway, so 10,000, 2,000 profit, 12,000 total account. Tomorrow, say we're trading options, tomorrow we have $12,000 available, right? Now, should we go ahead and put $12,000 back in a position, say 10 contracts or 5 contracts or something? You know, how about no? So we're going to take this, we're going to divide it by 2. All right, so now we have $6,000 that we can use twice. Well, what if that's not enough? Okay, divide it again. So now we have 2 and 2, so we have 3,000 that we can use 4 times. All right, guess what? 12 divided by 4, or 3, is the opposite. So 12 divided by 4 is 3. All right, so you got the total amount of trades you could do at this point out of the 12,000. If you did 4 trades in one day at $3,000 each, then guess what? Now we're back to the same thing. Say, you made another $1,000 profit. Or you know what? Let's keep it even. Say you made another $2,000 profit. So now instead of 12, you got 14, right? And you used the whole set of trades. So you did 4 trades, you sold them, you made your profit, right? So now you got a total of $14,000 in your account. Now you're moving. Now you're getting somewhere, right? Let's keep it going. Let's keep making money, right? All right, cool. So we go down. Hopefully you guys get the gist of this at this point. So this is going to be, if this was live, I would ask if anybody has any questions at this point. Next time I might do a video live and maybe get some interaction. So anyway, cash account, you must have $25,000 in your account to actually avoid and get around the pattern day trading rule, period, or more. That does not include margin. That doesn't mean you put 10 grand and now your account's at 40, depending on how big your margin is, or your available margin and balance, because they give you 2 times, 4 times, depending on how much money. 25,000, most of the time they'll give you 4 times. You'll have $100,000 worth of value in the account for margin. So if you bought $100,000 in shares and it went up $10, you just made a hell of money. As long as it doesn't go down and you catch a margin call and then you F yourself. All right, don't do that. The cash account, the balance that I feel like someone who is very disciplined can actually net a solid trading, pattern day to day or week to week or whatever. Trading every single day, I would honestly say is not necessary. There's even traders that are very professional that don't do that. And so in the event that you decide you need to, trade every single day, I really hope you're trading with a plan, because if you're not, then it's going to be an issue for you, and eventually you're going to get burned. So with all this war stuff going on, you got the president talking about, apparently he stepped back at the end of the day, so we don't know what's really going on. We're taking a look at the market from last night, and it just completely shot down. Defense stocks went up. Oil and gold, I believe, went up as well. And then everything just started sliding. Like all the stocks pretty much lost. Amazon lost $50. Tesla dropped back down to 450 from 470 something. But just like that, overnight, by 4 a.m., everybody clicked in on futures. Everybody clicked in on stocks that were super discounted at that point. Because guess what the market did today? It opened pretty much exactly where it closed for the majority of stocks. And if they didn't open there where they closed at, they went up more, and then they met that level and went higher. Tesla has hit 498, almost 500, but that's a sweet number right there. And so it's getting very interesting with all this. So my recommendation for day traders or even day-to-day swing traders, maybe don't hold positions when we're talking about war and stuff like that. The trade deal was bad enough. I mean, a lot of people didn't swing just based on that. So now you have war talk with trade deals still actually not even signed yet. It's supposed to be signed on the 13th next week. So you're still looking at possible huge market swings up and down. I took a Nokia position, pulled out $360 profit in a couple days. I should have sold it yesterday when I was up 250, bought it back at 380 pre-market, and then sold it again at 403. Could have pulled about 15 cents a share. That would have been nice, times however many shares I had. Anyway, so back to this. Hopefully you guys understand this video. Hopefully you understand what I'm talking about, because if somebody's telling you that you can avoid the pattern day trading rule or you have unlimited day trades, they're full of shit. I'm sorry. Excuse my language, but that's just all there is to it, because you cannot avoid the pattern day trading rule specifically unless you have $25,000 or more in your trading account, whether it's stocks or options, whatever. Day trades are, so I didn't say this in the beginning, but day trades are, you have 4 day trades in a rolling 5-day moving window. So in the event that you trade 3-day trades, like if you're on Robinhood, it stops you. You're allowed to make 3, but the moment you make the 4th, you get banned for 90 days, or your account's locked, or whatever the hell they're doing. Show discipline in that. Use the pattern day trading limit so you can train yourself not to overtrade. Just because you have day trades doesn't mean you're a bad trader, because you're using the pattern day trading rule, because everybody says so it's cash cow. All this tells me that if you can't trade with discipline on this, is that this, I mean, it has their differences, and a lot of people say just better with cash cow just in case, you want to do this and that and the other. But the thing is, if you're not disciplined enough to be limited to, say, 3 to 4 trades a week, because the moment you make the fourth, you become a pattern day trader, so 3 trades a week. I mean, that's actually a lot. If you're actually planning trades, and even worst case, you're just buying, say, the end of the day, right? So I even did it for an experiment one time. I bought a lotto shop call it was high. It was like, I don't know, like 380 or something like that when shop was still down at 330. I had so much inclination of the chart that it was just going to blow off the roof. Literally Friday, that call went from, I think it was, what was it, $29? No, not $29, $25. I paid $25 for the contract. The next day it went up 992% on that Friday expiration because it just blew the roof off, got all the way up. I think, matter of fact, it was a 300. And as soon as it pulled back, at the end of the day on that Friday, my 992% turned back into, I think it was like 36%. So I actually took profit on just what I had, bought it at basically like $10 more. So it was actually extremely stupid on my part, honestly, not to take the profit at $250 when I opened the trade at 27. Real quick, because Tesla's just been on this massive, just ridiculous run. I called out in the Discord chat. Now, granted, I'm sure nobody's held it this long if they even did do it. I didn't hold it that long myself. I doubled my money and I got out. So the $77 cost of a $425 Tesla call for January 17, which is not even this week, next week, that son of a bitch is worth $7,100 right now. If Tesla continues and breaks 500, that thing will probably be worth almost 12, or maybe not 12, probably 9,000 to 10,000 if it continues higher. If it goes to 550 or 600, then it's just insane. So don't tell me that options cannot multiply money in drastic ways that you've never seen before, because they absolutely can. Will you catch those plays all the time? Is it probable to expect that you're going to get a 30,000% increase or return? Absolutely not. That's just stupid. Now, excuse me for being blunt about this stuff, but you guys coming into new trading, I was new 3 years ago to options, right? I only ever traded strangles. But I made consistent profit until the whole trade war thing started up. And then I started experimenting. I got into TCX and Trader Circle. Me and Kev got together and he started teaching me more about technical analysis, which I never used. Besides just looking at the charts, trying to figure out what it looks like it's doing, right? Because if you're only using Robinhood for charting, I guarantee you're not going to be successful if you're trying to read technical analysis, because those are 10-minute candles. The charting on the computer is a little different for Robinhood, but there's no reason not to have a better charting program if you're trying to trade, right? Webull is free. The charting is excellent, and you can actually trade options in there now. I got approved for beta. I'm waiting on some funds to settle, and I'll give it a try, see what it's like. It looks pretty awesome. It's got bracket orders in it. Now, whether or not you can do options on the bracket orders, I'm not sure. I think they still want the $2,000 minimum to do margin trading in that Webull, and so that's pretty neat. But Fidelity, if you have a Fidelity account, whether your retirement's in there or what, nobody cares. Download Active Trader Pro for Fidelity, free download, excellent charting capabilities, live. So if you signed up for some course, for example, or some trading program that's telling you you're going to get, all this amazing software and all this crap, if they don't have live like Fed charts and it's delayed by 2 minutes, 5 minutes, 15 minutes, just stop paying for that garbage, because there's no, like, Webull is free and it has live charts. Why would I have to pay somebody else for their platform and then have to pay for live? That's stupid. Webull's free. I don't care what kind of trader you are, how much money you make. If you're paying for live quotes, unless like you're finding out 10 minutes before everyone else, which is not true and it's not going to happen, then you're just throwing money away, man. Anyway, back to the purpose. So PDT, can you have a way around it? Is there a way around it? No, there is not a way around specifically the pattern day trading rule. You must have, again, established by FINRA, FINRA, $25,000 or more in your account to avoid the pattern day trading rule in a standard trading account. Good faith violations is strictly for cash accounts. If you do not have enough money in a cash account, you can still get hit with a good faith violation. If you're not disciplined enough in your trades, you're not trading properly, you're just buying and selling, you don't know what the hell you're doing, you're buying and selling calls and puts just on a whim, like, oh, this guy said buy a call, so I bought a call, but wait, it's losing money, let me sell it. Then you turn around, next thing you know, you've used all your however much money in your cash account, 500,000, 10,000, 20,000, whatever. I mean, if you got 25 G's, you might as well just stay with this here and not worry about it, because the cash account is not going to, you're still going to get hit with a good faith violation. So if a trading account allows you 25,000 or more and you're not getting hit with any kind of penalties for that, for trading literally however many times you want in a day or a week or a month or whatever, then there's no reason not to do that. But in the event that you're on a cash account and you want to know how much I should start with in a cash account to be able to day trade more often, I'm saying about 10 grand, because that's gonna, if you split this, that's 2 trades for 5,000, or if you split it 4 ways, you know, you got 2,500, you know, 4 times, that's 4 trades. I mean, when you're making those kind of trades in a day, I mean, you're more than likely buying more than one contract. How many contracts should you buy? Entirely up to your risk tolerance. I wouldn't recommend more than 3. I've got burned on Shopify for buying too many, you know, and stuff like that. So this is probably a good number to start with in a cash account. If you're very disciplined, 5,000 should be very easy for you. 2,000 is getting a little further down, because you could split 2,000 up into X amount of trades. Like, say if you did 2 trades a day at 500 a piece, right? Not bad. That's going to give you a $1,000 leg on the backside in the event that you want to level up the position, or if you want to just get out of those and buy something different, or take multiple trades. So 2 grand gives you, you know, either $2,000 trades or 4 $500 trades, and that's plenty really for most people. And that's probably getting even squeezed at 1 to 2 contracts per 500. And that's saying like something like Tesla, you know, that's costing you $700 or $800 just being near the money, not even at the money really. Definitely not in the money, unless you're doing a debit spread, which with a cash account, I don't think you can do debit spreads. Not in TD Ameritrade anyway. I don't really use TD Ameritrade. I prefer Fidelity's brokerage as a whole. I've never had issues filling. I always, matter of fact, I'm going to make another video right after this about the undercutting and getting rid of limit losses again, because I guess the last video wasn't clear enough. So anyway, pattern day trading rule. Are there secrets? No. $25,000 or more in your account, that's how you avoid the pattern day trading rule. Cash account, but what about the cash account? I got unlimited day trades. That's not true. Your cash account is only unlimited up to the point of money you have. If you got 100 G's in this mofo, yeah, man, it's fairly unlimited for the day, or for, you know, even the week, because that's a lot of cash that you have available. You know, because most people aren't going to buy $100,000 trades, or even $20,000 or $30,000 or $40,000 trades, you know, unless you're really swinging a large account. But I think that's going to conclude this video. Hopefully this helps somebody. Hopefully you kind of understand what I'm saying here. So pattern day trading rule, can you beat it? Can you get around it? No. $25,000 or more in your account, period. No questions asked. I don't care what anybody says. Any other videos you see that's saying that you can avoid the pattern day trading rule by doing a cash account or whatever, it's not true, right? Your biggest swing of avoiding the pattern day trading rule is having multiple trade accounts where you're doing multiple trades, having multiple funds in all those different accounts. And that is the only real reason, or really possibility to avoid the pattern day trading rule, which in then return, you can still only make 3 in a day or a 4-day moving window, because that 4th trade is going to kill it on the 5th day. You know, it starts over, you know, and you're good. I always try to have 1 day trade available at all times, because now here's the thing. I have a cash account and I have a regular play account. My Robinhood is my sandbox, you know, because I'm trying to do like challenges on different spreads, different types of strategies. Like, I know strangles are successful. I know they are. I've used them so many times. Even on stuff like Ford and GE. Like, GE's over 12 bucks again, or like right there at that number. GE doesn't belong over 12 unless they do some seriously good stuff, because they're just going to get pushed back down under 12. Just the other day, it was over 12. I'm like, I guarantee you by Friday, that sucker's under $12 again. It was under today because of the market, but whatever. Consistent money can be made on small things. Whether they move slow or not, that's up to you. And then that goes back to discipline. Can you wait for a trade? Because I've got 63 Nokia contracts for 2021, and they're up 200 or like $100 to $200, give or take a dollar per contract difference. And the cool thing about it is I have so much expiration time. 5G's coming, baby. I don't care what you guys say or think. I don't even think the market could really affect the 5G stocks that are really going to push through, because in the event we had a big economic problem, everything is going to become electric, in my opinion. Gas cars and stuff like that are going to be like the mosey around thing until the economy starts to recover, and then something's going to be impacted and things are going to change a lot. But 5G stocks, I believe, artificial intelligence, robotics, 5G, of course, and several different things going in the future. Any kind of security and surveillance stuff that is getting like above and beyond like stuff you see in movies. Those are the companies you want to pay attention to. I'm not saying invest directly. I'm not even saying IPO them, but like Delta Airlines just partnered with Sarcos, I think it's Sarcos Robotics. Apparently they're the world's leading, robotics manufacturer for like exoskeleton suits. Whereas Exobionics tried to do a deal with Ford back last year or the year before that. But Exobionics stock price is in the dirt right now, so they'll probably reverse split if they haven't already, and then pump back up and then drive back down. I'm getting too many topics in this video, so we're going to cut this. $25,000 or more is how you get around pattern day trading. Cash account, minimum balance of my recommendation. If you're disciplined, 5 to 10,000, preferably 10, because then you'll have a lot of room. If you need to get in and get out of something because it started losing money or hit your stop loss or whatever, then 10 grand is probably a pretty safe number to start with. Don't gamble your money. If you don't know how to trade, join Trader Circle. We're more than happy to help you. I'll post a link in the bottom of the video in the About section. Webull, Robinhood, if you're new to trading and you want to sign up, I'll put those links down below. We both get a free stock. Robinhood limits you up to X amount of stocks or cost, and then Webull, I don't know what they have. I'm sure there's a limitation on it, but yeah, we both get a free stock. Why not? It's free money. I literally tested that. Somebody opened the account. They got a free share. It was like $4. They turn around. I don't want to trade. I don't want to do any of this stuff. All right, cool. Let the stock settle. It settled. Sold it. Cash settled. Cashed out the $4. That's literally a free $4 for literally just signing up for an account. Close the account out. Done. She got $4. Robinhood paid her $4, right? Many people I know that do it. They don't know. Hell, I know one guy that still has the free shares of Sprint that he got, and he's just holding them and just letting them do whatever they're doing. And I think he's actually up like $2 on shares. But build your account slowly. Be disciplined. You'll hear it in every single trading video from anybody that knows what they're talking about. And there's going to be a few things that they mention. Discipline, trader psychology, and account size. Those things will all be factored in together, and it's all in your head. That's going to conclude this video. Hopefully there is no confusion now. I'm sorry if any of you disagree with me, especially if you're in the chat room, with Discord, on Trader Circle, TCX. I am the official trader, and this is the pattern day trading rule and cash account explained. Hopefully you understand. Feel free, email me at officialtrader@outlook.com, and I will answer any questions you may have. Thank you.